Welcome back to Iraq Dinar Official, the channel where we remove emotion, speculation, and rumors, and replace them with structured understanding of how real financial systems operate. Because today we are not talking about theories or hopes. We are talking about how one of the largest banks in the world actually handles a single 25,000 Iraqi dinar note when it enters the US banking system. And to understand this properly, you must first understand that Chase Bank does not see currency the way retail holders do. Because for a global bank, currency is not a dream. It is an instrument, a liability, a compliance object, and a risk unit all at the same time. And the moment Iraqi dinar enters Chase's environment, it is stripped of emotional value and converted into data, policy, and procedure. And this transformation begins even before a teller touches the note. Because Chase operates under a centralized foreign currency policy framework that classifies every sovereign currency in the world based on liquidity, convertibility, geopolitical exposure, counterfeiting risk, sanction sensitivity, and settlement feasibility. And Iraqi dinar sits in a category that demands enhanced handling, not because it is illegal or fake, but because it is not freely traded on global FX markets and is subject to capital controls governed by the Central Bank of Iraq. And this classification alone determines that the dinar cannot be exchanged like euros or pounds. And when a customer presents a 25,000 IQD note or bundle at a Chase branch, the teller is not making a decision. The teller is executing a predefined intake protocol, and that protocol exists to protect the bank, the customer, and the financial system itself. And the first step is custody transfer, because the moment the note is accepted across the counter, it becomes Chase's responsibility, not in terms of value, but in terms of compliance and accountability. And this is why the teller immediately logs the transaction into an internal system that records branch ID, timestamp, teller credentials, declared denomination, and currency type. And this record is not cosmetic, it is legally binding, because it establishes the chain of custody from the first second. And from this point forward, the 25,000 dinar is never unaccounted for, never untracked, and never informal. And this is where many myths begin to fail, because there is no room for secret handling once the currency is logged. And after intake logging, the dinar is sealed in tamper-evident packaging with a unique barcode identifier that acts as its digital identity inside Chase's system. And this barcode is scanned every time the note moves, changes status, or is reviewed, meaning Chase does not rely on memory or trust. It relies on audit trails, and this is critical to understand, because global banks are built on systems that assume human error and therefore remove discretion wherever possible. And once sealed, the dinar is placed into restricted foreign currency custody within the branch vault, segregated from regular cash, because it cannot be mixed with US dollars or actively traded currencies. And at this stage, the dinar is already classified internally as non-negotiable pending verification, which means no employee can promise exchange, credit, or valuation. And this is not a matter of unwillingness. It is a matter of system design. And while the note sits in branch custody, Chase's centralized treasury and compliance engines are already evaluating the intake record against current policy conditions. And these engines operate continuously, pulling data from regulatory feeds, sanctions updates, correspondent banking advisories, and internal risk models. And they are asking very specific questions that have nothing to do with future revaluation, such as whether Chase currently has any approved correspondent bank willing to accept IQD, whether moving IQD would trigger enhanced reporting requirements, whether holding IQD creates stranded asset exposure, and whether recent geopolitical developments have changed the risk profile of the currency. And these questions are answered algorithmically and reviewed by specialized teams, not branch staff. And this is why two customers on the same day can receive different verbal responses while the underlying policy remains consistent, because the surface conversation is not the decision point. The system is. And once the initial policy check is complete, the dinar moves into the verification phase, which is often misunderstood by the public, because verification does not mean exchange readiness. It simply means authenticity confirmation. And Chase uses industrial-grade currency authentication machines that go far beyond visual inspection, analyzing ink chemistry, paper fiber composition, watermark alignment, security threads, microprinting accuracy, and structural consistency. And Iraqi dinar notes are compared against reference specifications provided through international central banking channels. And if the note fails, it is escalated for further review. And if it passes, it is marked as authentic but still restricted. And this distinction matters because authenticity does not override policy. And this is where many holders assume progress means payout, when in reality, progress simply means the bank can safely proceed to the next compliance step. And throughout this entire phase, the 25,000 dinar is generating data, timestamps, and status codes, all of which are stored permanently, because Chase must be able to explain the life cycle of that note to regulators years later if required. And after branch-level verification, the dinar is scheduled for removal from the branch environment entirely, because Chase does not allow restricted foreign currency to remain decentralized. And instead it is transferred via armored transport to a central cash processing and treasury facility. And this transfer is executed under dual control, GPS tracking, sealed containers, and pre-logged routes, meaning the dinar's movement is monitored from departure to arrival. And the moment custody shifts from branch to carrier, liability shifts as well, and that shift is logged down to the minute, because insurance, audit, and regulatory frameworks demand precision. And once the dinar arrives at the processing facility, it enters an even more controlled environment, where higher-grade verification systems and specialized staff reassess the note, not because Chase doubts its authenticity, but because repatriation or third-party transfer requires absolute certainty. And at this point, the dinar is no longer associated with a customer in any meaningful way. It is now an institutional object awaiting disposition. And this is a difficult truth for many to accept. Because emotionally, the note still belongs to the holder, but operationally it belongs to the system until resolution. And this resolution is not driven by hope or timing. It is driven by feasibility. And feasibility depends entirely on whether Chase can legally and efficiently move the dinar off its books. And during this period, the dinar is classified as restricted foreign inventory, which means it does not appear on trading desks. It does not influence profit projections, and it does not sit in any queue waiting for a global event. And this is where Iraq Dinar official must be very clear with viewers, because banks do not hold dinar waiting for revaluation. They hold dinar because they must resolve custody responsibly, and holding restricted currency is a cost, not an opportunity, because it consumes compliance resources, audit attention, and operational overhead. And as the dinar sits in this status, Chase's treasury teams assess correspondent banking options, because Chase does not directly transact with the Central Bank of Iraq for retail currency. Instead, it relies on intermediary institutions that have the legal authority and operational capacity to handle such instruments. And these correspondent relationships are dynamic, conditional, and reviewed constantly, meaning availability can change without notice. And if no correspondent pathway exists, the dinar cannot move forward regardless of authenticity or denomination. And this is where silence often occurs, because there is nothing to announce, no decision to publicize, and no action to take, and silence is not preparation. It is stasis, and stasis is the default state when policy conditions do not support movement. And this reality dismantles many online narratives, because it shows that time passing does not equal progress inside a bank. And as we approach the continuation of this deep dive, it is important to understand that everything described so far happens without speculation, without secrecy, and without exception. Because Chase Bank operates on systems that prioritize stability over opportunity and compliance over possibility. And in the next part, we will go even deeper into how international settlement systems, SWIFT messaging, Nostro accounts, and regulatory reporting determine the final outcome for a 25,000 Iraqi dinar note. Because the story does not end with verification, it ends with resolution. And Iraq Dinar official will continue to walk you through that reality step by step.